Hello traders, Greg here with a market update. Okay, so today's update is an update of you need to be cautious now. It's a bit of a warning update. These markets now, volatility across all asset classes is back, and it's back in a big way. Now, the bulls have had a very good run for a very long time. Where markets were generally one way, just grinding higher, new record highs on a daily, weekly basis. That has changed, with what we're seeing with this volatility. And it's very brave to say whether or not, this bull market is over. So not saying that, but what I will say is that we are seeing with confidence, some significant highs across most markets, and those significant highs are highs that it's going to take something special and may take some time, before we see the markets go through them. So look, if we start with equity markets, the most important equity market is the Nasdaq. The Nasdaq pretty much has led global risk higher in the last couple of years. So look, it is the general. So you really need to focus on what the Nasdaq is doing. Last Friday, the Nasdaq had its big red day. It was down 3.5%. It was the biggest sell-off that we've seen since pretty much April. Technically, what the Nasdaq did is quite important, because technically, on a weekly basis, on the weekly charts, we basically saw a bearish key reversal week. So bearish key reversals, and that was from record highs. Is a technical top signal, at least in the short term. So textbook basically says you don't expect to see a new record high in the short term, but what you do expect to see is a new low from that bearish key reversal from the low of last week. The low of last week there was at 24,200. So if we see, we're at some stage this week, we're expecting to see a low below that. So, and I would also suggest that if we did see a break of 24,000, it could open the floodgates lower for Nasdaq. So, at the moment, the bias trading Nasdaq and just trading equities in general, because S&P also in the US had a bearish key reversal week on Friday. So bias at the moment is trading this market from the short side. Now if we look at the crypto markets, the volatility hitting the crypto markets probably worse than any other market, and we've seen some real blood on the streets there. Obviously, on Friday in 24 hours we saw a record liquidation, $19 billion liquidated from leveraged positions. And that was like 1.6 million traders' accounts went to zero. So I can say with a lot of confidence that, especially for Bitcoin, that record high of 126,000, that is not going to be seen anytime soon. I'd imagine that those crypto traders, the scars are still very fresh. A lot of traders probably will never trade again after what happened to them. So they're not going to be rushing to buy Bitcoin and crypto, Bitcoin above 120,000. And certainly the bias there again, short side. One of the things, if we do see Nasdaq and risk start rolling over and selling off, again, because those scars are very fresh in the crypto community, I don't think they're going to be hanging around for too long with the risk off environment, and you could see obviously crypto a lot lower. So certainly, probably this is the market you probably need to be the most cautious in. Moving along, precious metals. This has been obviously a raging bull market. Probably the best bull market out of all the markets. Obviously, has been absolutely one-way traffic. The last couple of months. But again, just like every other market that we just discussed, equities and crypto, we've seen good volatility hit precious metals as well. On overnight, after we saw gold hit a new record high of 41.80, and also silver make a new record high of 53.50, quite amazing. Risk was rolling over in markets, and we saw a quick drop in gold of $100, and also silver dropped $3, went all the way back down to 50.50 before we saw a little bit of a bounce. But these are huge intraday moves, just massive. So whether you are actually long or short, fresh long or short on the day, super hard to keep positions. And again, I can probably say with a bit of confidence that those record highs that we've just seen, gold up towards 4,200 and silver up to 54 even, I would say that they are significant highs as well. So it's going to take the market something special to get them through. When we do see risk rolling over and all this volatility in the other markets, traders a lot of the times can then look at the precious metal markets and book profits there to pay for some of their losses in the other markets. So that is something to be cautious and obviously to watch out for. But look, the key takeaway from everything we've just talked about is that volatility is back in markets, right? So it is not just a one-way street to record highs at the moment. And so, they are dangerous markets, huge intraday moves. You need to be cautious at the moment. There really isn't too much going on with data-wise today. Tomorrow, though, we do get some data in Australia. That's going to be the employment data. Market is expecting plus 17,000 for headline unemployment rate to be around 4.3%. If the unemployment rate is what's important here, for the whole of 2025, the unemployment rate has ranged only from 4.1 to 4.3%. So it has been stable. It's basically showing that the employment market in Australia is still solid. Anywhere below 4% is pretty much full employment. So we're sitting just above full employment. I think the RBA, the red flags, you'd need the unemployment rate really to go up to 4.5% and above, going towards 5%. That would warrant rate cuts. So I think tomorrow's employment data is going to be a non-event as far as the RBA is concerned, and pricing for the RBA. Market's got about 40% probability or chance that the RBA will cut on Melbourne Cup Day in early November. I think that should be 0. I think there's probably no chance that with employment as solid as it is and inflation, which is a issue for the RBA now, because monthly inflation's gone back up 3.1%. RBA does get third quarter inflation CPI data, though, at the end of the month on the 29th, just before they meet. So that probably is going to be the most important economic data for the RBA in Australia, not so much the employment data tomorrow. But no doubt the headline tomorrow, if it comes out well above or below expectations, could move the Aussie a little bit. But the Aussie at the moment is going to basically rise or fall with risk and volatility, as it is a risk currency. Good luck with your trades, and catch back with you soon.